Oh, welcome everyone to today's Reducing Farm and Ranch Risk webinar. We are going to look at making sense, 3 key farm financial statements you need to succeed. And our guest presenter today is Colette DePhelps, Area Extension Educator, Community Food Systems and Small Farms in the Northern District. Welcome. So we're going to skip this at this time, but normally we want you to close any programs that you have on your computer so that it doesn't affect your bandwidth. And we want you to check for any problems with clarity, speed, etc. And if you were having problems, or if you do have problems, you call in to just silence your computer, and that way it doesn't have any echoing from your phone. And then, of course, we have the chat where you can type in your questions, and we will be keeping an eye on that and answering questions as we move along. And of course, this webinar is being recorded. And lastly, there's a 2-minute, if you can take a couple of minutes at the end of the webinar to provide feedback, we would greatly appreciate any advice or any comments that you have. So today, the University of Idaho Extension and the Farmer Veteran Coalition of Idaho chapter are committed to improving the economic opportunities and quality of life of military veterans, choosing agriculture as their next mission. This webinar is part of a project of the University of Idaho and the Farmer Veteran Coalition Idaho chapter aimed at reducing risk for military veterans engaged in agriculture. This project is funded through a Western Extension Risk Management Education Center grant, and over the next year, we'll be delivering multifaceted production, marketing, financial, legal, and human risk management education to new and beginning veteran farmers and ranchers across the state. We'll be presenting monthly webinars and podcasts, and beginning this fall, hosting regional in-person workshops and tours in each corner of the state. So please stay tuned. So our team, this is Ariel Agenbrod on the left, me facing the screen. She is the Area Extension Educator, Community Food Systems and Small Farms at the University of Idaho Extension. And this is me. I'm Connie May, retired Air Force, and I'm the program coordinator with the University of Idaho Extension. And I'm also the president of the Idaho Farmer Veteran Coalition. We have been doing several webinars and podcasts. There's a total of 10 that we have planned. We've done 3. Well, this is the 3rd webinar in the series, and we've already done 2 podcasts with a 3rd one ready to edit and upload. Our regional workshops and tours are planned for October, November, March, and April. And each of these are 2-day intensive workshops focused on risk management topics related to production, marketing, legal issues, farm financials, personal safety, and health. And the tours will visit veteran farmers in each area, as well as University of Idaho research farms, processing facilities, and other resources of interest. And the workshops would be free of charge with meals provided and tours provided. And currently, we are looking at October 4th through 5th in Filer, Idaho. Details are still being worked. We'll get those published as soon as we have them. And then we have November 15th through the 16th in Caldwell. And we'll get those pieces of information out to everyone, and that gets set up. So the goals for today, after participating in this webinar, we hope that you'll be able to identify 3 key financial statements, balance sheets, income statements, and cash flow statements. Increase your knowledge of how to use these documents in your own operation, and be more prepared to use these documents to guide current and future decision making. And with us today, we have Colette DePhelps. She is the University of Idaho Extension Area Extension Educator, and she specializes in community food systems, small farms, organizational development, strategic planning, facilitation. She advocates for and uses community-based participatory approaches to education and research to develop impactful programs. Colette was integral to the planning and delivery of the first Idaho On the Farm Sustainable Agriculture Training for military veterans in 2023. Her presentations on farm business structure and financial documents for veteran farmers was outstanding, and we asked her to share them with you again today. And with that, I'm going to hand it over to Colette.
Thank you, Connie. I'm really happy to be here today. I'm going to share my screen. So just let me know that that all came through okay?
Yes.
Okay, great. Well, I'm excited to be here today to talk to you about 3 key farm financial statements that will really help you to understand your farm business operation and help you succeed. So I'm going to focus on 3 different financial statements: the balance sheet, the income statement, and the cash flow statement. And we're going to do a deep dive into each one of these statements. And then I have provided resources that Connie will send out to participants afterwards that are going to help you take the next steps. I want to acknowledge that American Farmland Trust has done a lot of work to help beginning and small farmers. And some of the content of today's presentation was actually developed as part of a program that I cooperated in looking at land access for farmers. And so that was funded by the USDA Department of Agriculture under the National Institute of Food and Ag. So I want to thank the American Farmland Trust for all the work that they've done to bring different curriculums to the fore, specifically around financials and land access. So it will be really helpful for me to know a little bit about you. So Connie has a couple of polls, just 2, and I'd like to know, how many years have you been farming or ranching? So if you can just take a second to click on the answer that is most appropriate to you. So we have just starting 0 to 1 years, 2 to 3 years, 4 to 6, 6 to 10, and over 10. So to answer, it's just like a survey where you just click on the choice that works for you. So 2 to 3 years. So that's great to know. Thank you so much. We're going to go ahead and end that poll. And then just to let me know how familiar you are with financial statements. I just have a question about financial statements, and it's okay if you don't use any of them, but if you do use some of the financial statements that I'm talking about today, I would love to know that. So Connie, if you can launch the second poll. So this is a select all, so you can multiple choice. If you use any of these financial statements, you could select them. So balance sheet and the income statement. Excellent. Okay, that is super helpful to know. So this webinar is being recorded. I am going to delve into a bit about the balance sheet and the income statement, and then we'll talk about the cash flow statement and cash flow budgets. So these 3 key financial statements actually work together. So the balance sheet tells you your current financial position. And generally, people are looking at the balance sheet over a set amount of time. This is not something that you necessarily look at every month. Oftentimes, people look at the balance sheet quarterly. They might look at it every 6 months or annually. And then the income statement, it tells you whether you're making or losing money in your enterprise. And you can look at an income statement and look at income and expenses for your entire farm or ranch, or you could look at a specific enterprise, such as if you're raising hogs or you are raising tree fruit, but you also are raising some other types of row crops. You can break things out and look at those income statements around a specific enterprise. The cash flow statement really helps you keep track of where cash comes from and where it goes. And we have different information that we track in each one of these financial statements. So let's go ahead and delve into the balance sheet. So the balance sheet details your assets, your liabilities, and tells you what your net worth is. And your balance sheet can focus either on your personal assets and liabilities, or it can focus on your business and assets and liabilities. Often within farms, especially when people are just getting started, they have a lot of integration of personal finances and business finances. And the best practice is really to divide those and have you look at your businesses and your personal finances separately. And you can do that within your balance sheet. So you can look at the things that you own personally and the liabilities that you have personally, separate from what you own within your business and what you owe within your business. So let's say you're creating a balance sheet, a personal balance sheet. You're going to look at the assets, the things that you own, you're going to list those out, and you're going to look at the value of those assets. And then you're going to look at the liabilities, what you owe, your debts. And those debts could come from a lot of different sources. They could be student loans, they could be credit cards, they could be a mortgage. And when you subtract your liabilities from your assets, you get your net worth. So let's look at what that looks like in a very simple example of a balance sheet. So on this balance sheet, we have some assets. These are the things you own. You have some savings. You have $33,000 in your savings. You have a truck. In this case, you own the truck outright, and you've estimated that the resale value of that truck is $25,000. So in the balance sheet, you're trying to estimate the actual value of what you have. You may have paid $50,000 for that truck, but that truck has depreciated over time. And if you were going to sell that truck, you estimate that you could sell it for $25,000. So you're going to value it at what its actual market value is, which would be $25,000. Your real estate, real estate's going up in value. And so you're going to, again, use a market value. So let's say you own a piece of property, and it is currently valued at $150,000. So your total assets, when you add those together, are $208,000. Then looking at liabilities, again, this is what you owe. You have a credit card balance. So we put that on as a liability. Your truck is paid in full, no liability around your truck, but you still owe $100,000 on your piece of property. So that's a liability. And then you look at your total liabilities are $112,000. So when you subtract your liabilities from your assets, we see that your net worth, if you sold everything you had, we could estimate that your net worth is that you would end up with $96,000. So why is a balance sheet useful? It's useful because when you're looking at your farm business, it's showing your farm's solvency. And when we talk about solvency, what we're saying is if you sold all of your farm assets and you paid off all your farm liabilities, would you have a positive balance? If the answer is yes, then we say that the farm or ranch business is solvent. If the answer is no, then we say it's insolvent. And that's really important for understanding, especially if you're going to seek loans. You really want to know how your farm itself is doing, and that's separate from your personal assets. You can compare your balance sheets that are looking at a specific time frame, and you can compare them over time, and it helps you monitor whether the value of your investment in your farm is growing or shrinking. So it gives you that big picture, and you can compare over time. You can set some goals. You can use your balance sheet to benchmark whether or not you're moving towards those goals. It also shows the relationships between assets and liabilities, which can help you troubleshoot some cash flow problems. And we'll be delving into that more when we look at the cash flow statement. But if you think about it, you can track, you have an asset, it has a certain value. Let's say you hadn't paid off your truck. Well, over time, the value of your truck is decreasing, and you're paying off that loan. But you can kind of get a sense of whether or not those things are happening at a similar rate or a dissimilar rate. You can also be thinking about what the benefit is going to be of maybe paying off more of your debt as you're looking at the value of those assets. You can use the information from your balance sheet with other financial statements to evaluate different aspects of your farm financial performance. And we have an hour today to talk about these balance sheets, so I'm not delving into all of those details, but I will be showing you at the end of the webinar 2 really great resources that you can use to kind of delve deeper into the balance sheet and how the balance sheet can work with your income statement and your cash flow statement. So I mentioned your net worth in the previous spreadsheet example. So these numbers are from the previous slide. And your net worth is your assets minus your liabilities. And so your net worth percent is an important indicator. And so the way that you look at what your net worth percent is, you take your net worth, you divide it by the value of your total assets, and you get a percentage. This is an important financial ratio, and it's particularly important to lenders. While lenders' requirements vary, if you have a negative or a low percent net worth, it's going to be difficult to secure funding. There are some programs, and you can work with the USDA Farm Services Agency. You can work with our regional farm credit organization, Ag West, to really look at your financials and look at your business plan, your entire picture, and see if it's possible to secure financing. But again, if your net worth is very low, it might be difficult to secure financing. And so this may mean that in your overall farm financial planning, perhaps your goal is to own land. In the interim, maybe that is not an investment you can make or receive financing for. So you're going to be looking at different options for leasing land while you grow the value of your business and you develop enough net worth to be able to qualify for a loan to purchase property. I mentioned separating personal and business financials, and I just really want to emphasize that this is an important part of risk management for your farm or ranch. There are so many farms that operate in default as a sole proprietorship or as a partnership, perhaps with like a husband and wife. And people start farms, they often live on their farms, and so it's really easy to use your personal capital to build your farming operation. But what you really want to do is you want to separate your personal and business financials. And part of that is because your business has a certain amount of risk associated with it, and it has financial risk and it has legal risk. And you don't want your personal financials to be liable for that risk. So one of the handouts that Connie will be sending to you is about business structures and looking at the way you can structure your business to mitigate risk and how that relates to your taxes. So what I'm going to encourage is, as we go through and talk about these different statements that are important for your farm or ranch business, that you start by creating a set of these statements that's really looking at your personal finances, and then you tease out what is your business for your farm or ranch, and you create a second set of statements that's looking at those business finances. And then ultimately, you can look at opportunities or different ways that you can structure your business so it mitigates any type of financial or legal risks. I'm 100% willing to talk with people offline about that. And so you can always contact me at University of Idaho and we can talk more about business structures. But it is an important part of financial management and thinking about how you divide your finances, protect your business, but also get really clear about whether or not your farm or ranch business is making money. If your finances are mixed in with your personal finances, your farm and ranch business finances, it's often really difficult to understand whether or not you're making money. And that's because we often subsidize our businesses when they're getting started with off-farm income. And so separating those and tracking those investments that you make into your farm or ranch business can be super helpful. So after this webinar, I encourage you really just to grab a sheet of paper and start creating balance sheets. It can be super simple. You can create a list of your personal assets, personal liabilities, practice calculating your net worth. Next, Do the same for your farm or ranch business. And then what insights did you gain? What is this telling you about your financial position? There is a more complex Excel spreadsheet that is going to be shared with you by Connie after the webinar. And that was created by Michigan State University. And you'll be able to go in and look at their spreadsheet, which is going to do calculations for you, but to help you think a little bit broader about what those assets and liabilities might be. There are a lot of different balance sheets that examples available online that can also help you start to itemize out what your assets are, because sometimes, we need to be prompted to think about that and how that relates to our farm or ranch business. So next, I am going to jump into the income statement, but I'll do a quick pause, Connie, just in case there's any questions that have come in talking about balance sheets. I don't think there's any questions. So if a question does come in, you can always type that in the Q&A box and Connie will have me pause and answer that question. Okay, let's take a look at the income statement. So an income statement details where your money comes from and where it goes. It's also known as an earnings statement, sometimes profit and loss or profit statement. If you use a computer program like QuickBooks to manage your finances, you can generate a profit and loss statement and look at the window of time that you want to look at for that profits and loss. But essentially, the basic format is that income minus expenses equal your net income or your net profit. And when it's positive, you have more income than expenses, but it can be negative if your expenses are greater than your income. And often that is the case when you're starting your farm or ranch or when you're expanding. So you do need a positive net income to be able to access finances, but that's going to look different at different times in the life cycle of your operation. So on an income statement, we put two different kinds of costs. We put fixed costs and variable costs. Fixed costs are expenses that you need to be in business, but aren't tied directly to production. So these are like insurance or property taxes. And oftentimes when people are looking at the different enterprises that comprise their farm, I gave that example earlier that you might have a hog enterprise and a tree fruit enterprise. You will have fixed costs that you need to allocate to each of those enterprises when you're looking at their profitability as individual enterprises. But there are things that are not necessarily directly tied to producing hogs or producing tree fruit. The costs that are directly tied to producing a specific enterprise, those are what we call variable costs. So here's a really simple financial statement. Again, you can find many of these online. There's many land-grant universities that put together sample financial statements to help you get started in creating your own. So here we see some variable expenses related to vegetable production. So we have chemicals and fertilizers, maybe a little bit of custom hiring. You have some employees, so there's some benefits that are related to production. You have, your freight and trucking, fuel, gasoline, looking at seeds, some specific supplies, etc. And so in your income statement, you're going to put your total farm sales, and then you're going to list those variable expenses. And when you subtract those expenses from your farm sales and divide them by your total farm sales, you get a gross margin. And so you get just looking at variable costs, this is where I am in terms of how much income is coming in versus my expenses. What's really important for the income statement is that you do not put loans on your income statement, because loans are not income. You didn't earn that money. You borrowed it and you have to pay it back. So while loans are on your balance sheet, they will be on a cash flow statement. They are not on your income statement, because with your income statement, you're really looking at that money that's actually coming in from farm sales. It could also be services. If you do custom haying and you have farm income from that service, that would be identified as farm income. So looking at some of your fixed expenses, these are the ones that you're going to allocate across your farm. They're not, again, related to specific of one enterprise, one crop, one type of livestock. And so this are things like your liability insurance for your farm. Looking at your interest expense, that is an expense. Even though your loan is not income, it's an actual expense that you have to pay interest on that money that you're using. So you would list that as an expense. And the amount that you repay of your loan is not an expense because you can kind of see that as a wash, right? Quote, you have income from loans, and then that principal is being repaid. Those cancel out. They are not on your income statement. But the interest you've had to pay to having borrowed that money to use it for your operation, that is an expense. And so it would be in your income statement. When you take these fixed expenses and you subtract them from your total income and your fixed and variable together, you get that net margin. That's the amount of money that you've actually made in your operation. And so when you think about the income statement, you are really looking at a specific time bound. Oftentimes people are looking at the income statement over the course of a year. Sometimes you might want to look at it at a subset, but you can look at that over time and see within that time frame whether or not you have made money. And then we're going to look at the cash flow statement because all of these statements come together. So cash flow actually details all the sources of cash that you have as well as where all that cash goes. And so you've created your balance sheet, you're understanding overall what your assets and your liabilities are and your net worth. You've created an income statement, so you're understanding where income is coming into the farm and where those expenses are. With your cash flow, you're looking at how that income and how those expenses come in over time. So generally, you're looking at it over the life of your farm. And so you can track information and put it into a cash flow as you have the income and expenses. You can also do a budget for next year so you can understand where it's likely you're going to be cash poor. Because in agriculture, income doesn't come every month generally because you have sales at certain times. So consider livestock sales. You may have some custom sales where people are giving you a deposit up front because you're going to be having your cattle processed in September, but people are doing a pre-order. So you're getting several $100s for each head up in the spring or summer. You would put that income as coming in the month that it is, but the majority of the money from that sale is going to come when you take that animal to slaughter. So you've got a big chunk of money coming at one part of the year and a little bit of money coming in at other times. Your expenses can be much more regular, or you can have a lot of expense for feed up front. And so you could have a time where you're cash poor. When you have a cash flow statement and you're looking at how your cash is flowing over time, you can see where you may need an infusion of cash to get through a lean time. So this isn't telling you that, if you have a cash poor time, it doesn't mean that your business is failing. It just means that when your expenses are coming in and when your income is coming in, might not be in alignment, and you have to plan for that. So within a cash flow statement, you put the income and expenses from your operating activities, which is what you identified in your income statement. You also put in cash flows from investment and activities. And so investment activities could be that you sold a piece of equipment And so you have that income from that sale, or you could have a piece of equipment that you bought. And so you actually have an expense from something that you've invested in to operate your farm or ranch. And then you can have cash flows from financing activities. And so within the cash flow statement, you actually do put when you're getting that loan income. And that's really important because that loan income, especially if you have like an operating loan, that income is going to come at a time, hopefully, that you can weather a cash floor time from your income statement. So again, cash flow statements are looking at your entire year. Most often people set them up month by month. Some people will put 2 months together. But again, you're looking at your actual income and expenses over that time. And then you're going to see what your cash balance is. As I said, you can have a cash flow statement that you're tracking as you're spending money. You can go back and look at last year, how you spent money throughout the year. You can also create a cash flow budget that's forward looking. And I really recommend doing this for the upcoming year. Like now is a great time to start thinking about fiscal year 2025. If your fiscal year starts January 1, goes through December 31, you can start laying out what you think is a cash flow budget for this coming year. You can use information of what's happened last year to do those estimates. And with that, you can understand like, oh, there was a time where it was really tough to have ends meet. And I might have had to take some of my personal savings and infuse that in my business. Or you may say, I didn't want to take money out of my personal savings. So I really want to look at getting an operating loan that can help me through these cash poor times that I have coming up ahead. So this budget really looks at what you think your cash needs are going to be relative to when you expect income to come in throughout the year. And so I think you probably can start seeing in your mind that your cash flows are really varying by time of year. And your cash flow budget is going to help you plan how you're going to deal with that variation. So here's just a blank example of a cash flow budget worksheet where you have months at the top. It's a spreadsheet. It's going to total into what your annual expenses are. So let's say we go back to that livestock example and you're thinking, well, I am going to have 10 custom sales. I'm going to sell 10 partial or whole animals. But I'm going to actually start marketing that when farmers market starts. So I'm going to have a booth at farmers market. I'm going to go there. That's where I think I'm going to be able to meet most of my customers, and I'm going to get those deposits. Well, farmers markets in Idaho generally start between April and May. So you might estimate that you're going to have deposits from those sales, in these first primary 3 months of the farmers market season. You then would be able to say, okay, and then the balance of that is going to come really in September and October when those animals go to slaughter. So I know that while I have a little bit of money to float me in the early season, I'm going to have some lean times in July and August because I'm not going to have a lot of income there. I'm going to have to really look at what my expenses are and when then I need to be able to plan for having less cash. One of the reasons that this can be really helpful is because some of your fixed costs, for instance, if you're leasing land, that's a fixed cost, your lease payment. You may be able to work with your landowner to make that payment when you have more cash on hand. So instead of perhaps making a lease payment every month, perhaps you work with that landlord that you make that lease payment in December after the majority of sales and income has come in from sales of those livestock, and you're going to have the cash to do that. Or if your lease is set up that you need to do a monthly lease and you know that there's going to be times where you're cash poor, you can adjust other expenses that you have, or you can talk to a lender about getting an operating loan just to carry you through that bump where you need to pay for expenses, but you don't have the cash to do it. And when you show your cash flow budget worksheet, you show your actual cash flow from a previous year, that shows a lender that, oh, yes, I can see when the income is going to come to be able to pay back that operating loan. So that's an example of how you can use a cash flow budget worksheet and an actual cash flow statement from a previous year to do some planning moving forward. So, any questions that have come in, Connie?
None so far.
Okay, great. So what financial information do you need to develop these financial statements? I have a worksheet that Connie will send out that's going to help you look at what financial information you need. But one of the first steps to develop these key financial statements is to gather your key financial documents. So documents that are going to be essential for creating a balance sheet, an income statement, and a cash flow statement or cash flow budget are your bank statements, your tax returns, credit reports. There are several different providers that provide free credit reports. Your savings account statements, if those are separate from your checking account statements, you have specific savings accounts, you're going to want to look at those. Any investment accounts that you have. Not your credit card statements, but your credit card statements. Student loans, business loans, mortgage statements, and lease contracts. So you're going to want to put all of this information together in one place so that you have the information you need when you sit down and start to fill in the boxes of these statements. As I mentioned, there's a couple of really great resources out there that explain these key financial statements in more detail and how they can work together to help you understand your financial position and manage risk within your business. So Building a Sustainable Business, a guide for developing a business plan for farms and rural businesses. This was created by the USDA Sustainable Ag Research and Education Program. It is free online. You can download the PDF. It is a very large booklet, so I will let you know that it has several hundred pages in it. One of the really nice things about it is if you're a person that likes to have forms, be able to fill those out, they have forms that you can copy and fill out by hand if you would like. The print version is only $21, and you can download the free version and the print version or order the print version from the web address here on this slide. And Connie will be sending this slide deck out to you, so you'll be able to have that link. You can also buy the print version and download the free PDF version so that you could just print those forms and use them multiple times. Another book that really talks about farm finances in a way that's very approachable and understandable is Fearless Farm Finances, Farm Financial Management Demystified. Again, these are great resources. They have been developed and vetted by farmers, and I think you'll find them to be really useful. Fearless Farm Finances, there are two versions. I'm showing you the cover of the 2017 version. There was a 2012 version, so if you go on Amazon, you'll want to find the most current version, but you can order that from $5 to $20. Definitely worth the investment. Again, I did send quite a few resources to Connie. I have sent you templates for you to be able to create a balance sheet. So these are Excel spreadsheet templates where you can put in your information and it's going to automatically calculate totals for you and different types of percentages. So for your balance sheet, your income statement, your cash flow statement, and your cash flow budget. She also has a handout that's going to help you look at different types of business structures. Again, thinking about separating those personal and business finances, and a checklist for those key financial documents that you will need to develop these different statements. So that's what I have to share today. Connie, is there Any questions that came up for you during this presentation or any of our audience that we'll want to address before we wrap up?
No, I was just thinking, you know, if there's a way to maybe do some bulk purchases for maybe our upcoming workshops, if we do financial presentations, I think that might be a great idea to do that for our attending members. If there's a way to do that, actually.
I think that is a great idea. It's great to have this overview of these different statements. The real learning comes when you start to work with them. And so in an in-person workshop, if you are going to a financial workshop, look at that key financial documents list and pull those together, because having those key financial documents when you're at a workshop and you're actually being introduced and starting to work with these different forms to create these key financial statements is going to allow you to pull the real information that you have into those statements, and you're going to get a working document that's not hypothetical. And so I would really encourage that little bit of pre-work to get that information together for those upcoming in-person workshops.
Well, thank you very much, Colette. This is great information.
Yeah.
Do we have any last parting questions before we end the webinar? Okay. Well, thank you for attending today, and we'll get the link out as soon as possible, as well as all the resources that Colette has mentioned. And thank you again, Colette, for being our guest today. We greatly appreciate your expertise and coming, and hopefully be able to have you on again at another point in time. So
that sounds great.
Everyone.
Thank you, Connie. Thank you, everyone. Have a great day.
Bye.